back, everyone. Next, we have Aytu BioPharma. It trades on the NASDAQ under the symbol AYTU. And it's a pharmaceutical company commercializing a portfolio of novel prescription therapeutics for ADHD and pediatric medicines. Please welcome its chairman and CEO, Joshua Disbrow. Nice to see you, Josh. How are you doing today?
Doing great, Anna. Thanks for having us to the conference. Appreciate it.
Happy you're here. Floor is yours. Call me back when you're ready for questions.
Will do. Thanks, Anna. And thanks, everyone, for being here. Again, my name is Josh Disbrow. I'm the CEO of Aytu BioPharma, joining you from our headquarters that's located here in Denver, Colorado. As Anna said, we are a commercial stage pharmaceutical company, and we're focused on two substantial prescription segments, one of which is the ADHD or attention deficit hyperactivity disorder market, as well as the pediatric market. And if you're hearing the story for the first time, you're hearing us at an interesting time when we've really refocused the company, made a substantial strategic pivot, and have begun to drive positive earnings per EBITDA, and we'll get into some of the rationale behind that. But most notably, we're really at an important time in the company's history as we've begun to experience significant growth, are benefiting from some unique and potentially long-lasting industry tailwinds that really are favoring our brands, particularly on the ADHD side. And so excited to be with you to share the Aytu story. I'll remind you that during the course of this presentation, I may be making some forward-looking statements, so you can see the forward-looking statement here on the slide before you. As I mentioned, we are a commercial stage company, and we're strongly focused on driving margin, driving EBITDA specifically as we get towards profitability and cash flow. And the company is doing that by virtue of multiple things, one of which is continuing to drive revenue growth on our ADHD brands as well as on our prescription pediatric brands, which I'll speak to, and really excited about where we are positioned in the ADHD market, given the fact that there's been a relatively substantial and long-lasting stimulant shortage. When I say stimulant, those are the primary medications that treat ADHD, stimulants such as Adderall XR, and its generic equivalents, as well as now some of the methylphenidate, also a stimulant, products have begun to become in short supply, and we've really benefited from that. But we expect these to continue, and we expect that and have seen that as patients get switched from some of the larger incumbent products to our brands at Adzenys and Cotempla, these patients stay, and they're very happy with not just the products and their clinical response, but also with the experience that they get through our program, which we call RX Connect. So we're really positioned well to grow as we go into the future. And as importantly, as we're growing the top line, we're really focusing folks even more so on what we're doing to improve our bottom line. The RX segment, which really becomes the go-forward company as we focus ourselves into fiscal 24, which we're now in and beyond, it is all about driving adjusted EBITDA, driving the company towards profitability and getting to cash flow. So to that end, we've made major changes last year. Just before the Thanksgiving holiday, we made the difficult but very important decision to suspend all clinical development that was costing a great deal of money. That has essentially ceased entirely now, such that our pipeline R&D has really been suspended. And that really enabled us to almost immediately get to a position of positive EBITDA. And so in the face of growing sales, in the face of these positive industry trends, and in the face of really focusing the business and cutting out parts of the business that have not historically been cash flowing or even EBITDA positive, we are really well positioned as we go forward. Revenue growth has been really solid over the last several years. And I'll point out to you that growth from 2022 to 2023 was 100% organic. This is based on the results of multiple acquisitions that we had undertaken over the preceding couple of years, most notably the acquisition of Therapeutics that closed in March of 2021. And so really from 22 to 23, we got the products integrated. We got the teams very well integrated from both the commercial perspective as well as the operations perspective, consolidated a great deal of G&A, continue, by the way, to consolidate expenses as we get the company sort of narrowed down to a single general ledger, for example, a single operating system, a single ERP, and all of that stands to further improve margins. But all along the way, we've improved our revenues very nicely. And if you look at the consumer business, while it has contributed meaningful revenue, the consumer business, importantly, has not contributed EBITDA or profitability. And so that is one of the other items that we've undertaken here recently, and it is to focus on the RX segment, which is the orange bars here, which again have grown very, very nicely from 61.1 million in fiscal 22 to 73.8 million largely driven off the backs of our ADHD brands with some contribution from the pediatric brands as well. And so while you'll look at revenue growth, frankly, we are de-emphasizing revenue growth on the whole business in favor of really just focusing on revenue growth for the prescription business, which again grew from 61 to almost 74 million year over year. And the consumer business contributed, $3 to $4 million in negative cash flow for the company. And by shutting that business down, which we expect to do here in the coming couple of quarters, it will immediately reverse that trend and obviously start contributing, enable the company to bolster its EBITDA position as we move forward. So again, this is what I've described previously, in that we made the decision back in October of last year to suspend R&D, not to suggest that we couldn't come back to research and development at some point in the future, but until we are cash flowing and have really built a substantial cash position, there's really not interest in focusing on R&D. Our focus is on the commercial business, and over the last 9 months, we've continued to evaluate the health and viability of the consumer segment, and while it was growing and demonstrating sort of positive signs, frankly, a business that is just not going to contribute to EBITDA and margin nearly to the degree that the RX business will. And if you look at where the RX was positioned for the full year ending June 30th, the adjusted EBITDA for the RX segment was almost $10 million. And so if you really look at the company and say pro forma, it's the RX segment. And I should point out virtually all of our G&A, our corporate overhead, our corporate expenses, all the things that are associated with being a public company, inclusive of our staff, that's all loaded into what we call the RX segment. And so when you look at that 9.7, almost $10 million in positive adjusted EBITDA, that essentially is to say that is the company going forward. And if you assume additional growth, assume additional expense reduction, we're going to position ourselves, we think, very well from a cash flow and profitability perspective. We are now into our fiscal 24. We closed out our fiscal 24, our first quarter in September. We're now into our second, getting ready to close out the first half of the year here as we close out December. But for the first fiscal quarter, we generated a positive $2.2 million company-wide. That still included some negative EBITDA from some of the other operations associated with the consumer piece. The RX segment was actually $2.4 million on a quarterly basis. So again, kind of annualizing in that $10+ million range. And that's really without any additional improvement in expense reduction. We ended that quarter ending September 30th with about $20 million in cash. And again, because we had cut out R&D about a year ago, this shift away from R&D and the further shift into the prescription segment has really enabled us to extend our cash flow. And we believe we're very well positioned with that cash in hand to execute on our plans and move to profitability. So the growth drivers really are multifold, as are the profitability drivers. If you look at top line, we're excited about the growth we're seeing in the ADHD space. We're continuing to experience significant adoption. New physicians are finding our products at Zenith and Cotempla, which I'll speak to here in a moment. And again, the net revenue from the prescription products business for the year that ended in June was almost $74 million, up from $61.1 million of the prior year. ADHD products grew nicely, but frankly, continue on an even greater growth trend. Pediatric products grew extensively, and while that we expect that growth rate to tamp down, solid contribution from those products as well. These products are novel, they're IP protected, they are solid, and they stand alone, and I'll give you more specifics about those here in the next slide. And we have a phenomenal program and a platform really called Aytu RX Connect, which enables us to offer patients, physicians, pharmacies, all the stakeholders in the value chain to really benefit. And I'll share with you more of the details in it, but it's a novel in-house developed program that enables simplicity and consistency and reliability such that physicians know what they're getting. They get the same products prescribed. They have minimal hassles in the form of callbacks from pharmacies, and patients get products reliably. They get them at a reliable, consistent price month over month over month. And we're proud of this program. And we're also proud of the team, the sales force that's out there. It's a very small, lean team comprised of about 35 professionals, 40 all in if you include the pediatric representatives. So it's a small footprint covering many major geographies in the U.S. Room to expand, but frankly, our charge is getting to profitability. We'll expand as appropriate, but we really have the team in place and the mechanism through RX Connect in place to really drive what we think is exciting, sustainable growth, and excited about how the company is positioned from a top line perspective and the fact that we're being able to take advantage of many of the market factors that are in our favor. And very importantly, again, margin improvement really is our calling card going forward. Multiple aspects underway, as we've mentioned. We continue to obviously drive down R&D expenses. Those are almost entirely down, such that the R&D program is really suspended. There are some R&D expenses, but those are attributable to the commercial products and what we would call sort of keep the lights on types of expenses that you need to employ to ensure that you're maintaining stability and making sure you're remaining compliant with all the FDA and DEA regs. So that gets bucketed into R&D. So there is some R&D spend, but it's relatively small. SG&A continues to come down. Sales and marketing will come down further as we wind down the consumer business, as I mentioned earlier. And a big margin improvement initiative that we've had underway since the merger, really back in March of 21, has been to move out of the former Neos Therapeutics manufacturing facility in Texas in favor of aligning with the contract manufacturer. That enables multiple things. First of all, lower cost of goods, much smoother cash flows from a working capital perspective, in that you're really just paying a transfer price to secure the purchase order. And you're really enabling much greater efficiencies at a larger CMO that obviously can amortize their expenses over a larger base of products. Still going with the smaller CMO. We're not with one of the largest. We're going with one that can really give us a lot of attention and a high touch experience, and we've been actively engaged. And fortunately for us, we are really at the final point of being able to transition fully to this contract manufacturer, given the fact that the FDA approval for the post-approval supplement has now been received for both Adzenys, our amphetamine product, as well as Cotempla, our methylphenidate product. And they have now begun ramping up production. We've had our first products packaged, and we're excited about being able to fully begin realizing those margin improvements, which are material, and I'll share more towards the end. And again, the RX segment, positive adjusted EBITDA for the full fiscal year 23, Q1 of 24 for the calendar ending 24 was positive as well. And all trends continue to suggest that those margins will continue to be really solid and improve further. So again, can't emphasize enough the importance of margin expansion, because revenues as a company will go down, understanding that the 33 million in trailing 12-month revenue that we had with the consumer business, that will go to zero over time, and that's by design. And RX segment will obviously continue to grow, and we're excited about the trajectory. Why are we excited about these products? Well, quite simply, they're differentiated brands competing in large markets where there's a substantial need. ADHD is a significant condition. Millions of Americans suffer from ADHD, and they rely on stimulant medications primarily to treat those. And the reality is there are only 2 ODT extended release medications treating ADHD on the planet, and that is Adzenys XR ODT amphetamine and Cotempla XR ODT methylphenidate. These are novel, proven, effective, and patented products. And again, these are the only FDA-approved extended release stimulants in ODT formulation. What does that mean? ODTs dissolve very fast, so they work very quickly. Patients in the midst of busy mornings, and parents more likely who are administering the medications to their adolescents and their children, and even for themselves, if they think about just getting ready for work in the morning, you need something that is hassle-free, that works quickly. And so the ability to take Adzenys or Cotempla on the fly is important. And the fact that specifically with Cotempla, we see great data demonstrating 61% improvement as early as the first hour and 73% within the second hour when you compare it versus placebo. Significant improvement in children's math scores as we look at real-world classroom studies that have been conducted with Cotempla. And what's important about these products is they're filling a very important need that continues to exist in the market today. And that need is actually being able to secure the patient's medicines. Adderall XR has been in and out of supply for the better part of a year plus. And while we're hearing reports that those may start to abate, patients continue on a daily basis to report into us that they're continuing to face frustrations with, yes, it is back in stock, but the pharmacy had it yesterday. They don't have it today, and I don't know when I can get my hands on it. We essentially have a program where our supply is guaranteed, which I'll get into. And again, that's afforded through RX Connect. And this category is a large category. We're talking billions of dollars in terms of annual sales in the U.S. The Adderall category, the Adderall market by itself is in excess of $400 million. And so these are large products that we have an opportunity to come in and reliably take market share from. And then we have a line of elegant pediatric multivitamins called Poly-Vi-Flor and Tri-Vi-Flor. These are prescription multivitamins that contain multivitamins along with sodium fluoride, which is intended to be prescribed under the supervision of a physician. So these are essentially they manifest as drugs. They look and act very much like drugs, but they're not. And they, along with containing a prescription level of sodium fluoride, they contain a proprietary folic acid, specifically L-methylfolate, and the brand name of that is Arcofolin. We as Aytu have an exclusive U.S. supply to that novel ingredient. And what's important about L-methylfolate is that it's not typically bioavailable in the off-the-shelf form. Most of us have some level of a deficiency within our systems, whereby the enzymes don't break down folic acid to get it into a usable form of L-methylfolate. We deliver body-ready L-methylfolate directly through this novel ingredient, Arcofolin, and again, we have an exclusive U.S. license to that. So these brands stand alone. They compete effectively against other multivitamins in that they do not contain this novel ingredient. These are trusted brand names that have been around for quite a while. They're the most prescribed brand within the multivitamin plus fluoride category, and those products have been solid contributors for us. And one of the things I really have tried to emphasize with our team as we think about operational improvements and driving growth, we need to continue to drive growth. We expect growth to continue as we look out over the long term, particularly for the ADHD brands. But we're really pleased with the bottom line improvements that we've made to take us from 2 years ago, a negative EBITDA of $25.5 million to positive 10 in a relatively short period of time for the 12 months ending June of 23. So we're excited about the momentum that we've gained from a bottom line perspective and expect to see further improvement in growth of the bottom line. As I've mentioned, significant tailwinds really helping us along the way. We've captured many patients that have thrown their arms up and said, I can't find my Adderall or I can't find my Concerta. We've been able to step in and fill a really nice gap for these patients. Given the fact that Adzenys XR ODT is approved by the FDA as bioequivalent to Adderall XR, it really helps us message that to physicians. And if they're looking for something that, while it is not automatically substitutable at the pharmacy level, it is a product that is bioequivalent and can be reasonably substituted by the physician under their discretion. And so we've gotten many physicians on board, have brought on a significant number of new prescribers, even in places where we don't have sales representative physically in place. And so that tells you the word has gotten out that these ODT alternatives are available. And Cotempla is bioequivalent to essentially Concerta XR. While it's not specifically referenced to a Concerta XR, it's essentially bioequivalent to the methylphenidate extended release formulations. And it, again, Cotempla is available in an orally disintegrating tablet. Again, a common condition, huge category, and these patients, and again, almost 84 million prescriptions annually is significant. So it's a large category. And if you are competing in the ADHD stimulant category, you want to have an extended release offering, because that's a significant chunk of that market. The fluoride market dynamics are also really favorable, given the fact that many areas in the country, whether patients realize it or not, they don't fluoridate the water supply. Many municipalities in the tri-state area and metropolitan New York, specifically Long Island, and many municipalities in northern New Jersey, really throughout that state, as well as throughout the state of Connecticut and throughout Pennsylvania, they do not fluoridate the water supply. So patients need to be on fluoride supplementation, either through a supplement such as Poly-Vi-Flor or Tri-Vi-Flor, or through regular fluoride treatments. In many cases, patients do not see dentists regularly, and so pediatricians will rely upon these prescription supplements. And again, we have the largest, the most prescribed brand in the pediatric multivitamin plus fluoride market. It's a smallish market compared to ADHD. Of course, many markets are compared to the ADHD market, and these have demonstrated growth. I'll speak to a little bit later. We had a bit of a hiccup in the last quarter, the quarter ending September, but frankly are really encouraged by the latest trends that we've seen here coming out of November with respect to prescribing to really get those products back to growth. The ADHD portfolio has been exceptional in terms of its growth, 25+% annual growth when you look at prescriptions for our brands Adzenys and Cotempla. significant growth since the year prior to that. And this is not all reliant upon the shortage. This is really good old-fashioned execution, sales force in the field, some of it coming to us obviously by virtue of the shortages of Adderall XR in particular. But what's also important is because of the dynamics within the market and because of the payer landscape, what physicians and patients are increasingly looking for, quite frankly, is a solution to their hassles, and not having to worry about which products are on formulary or not on formulary, not having to worry about which pharmacy has a product stocked or not. And so what we've developed to really solve the critical issues facing physicians and patients is RX Connect. Aytu RX Connect is driving significant growth for us, and we believe can drive significant growth for our future products as we move forward. Essentially, we've created in-house a novelly designed program that brings a constellation of about 1,000 pharmacies into our network and numerous back office techniques to make sure we understand exactly the dynamics from a financial perspective affecting these pharmacies. And in many cases, these are independent pharmacies that operate in large geographies. And these pharmacies are able to go in and capture these patients' prescriptions. We'll tell physicians to prescribe, and we would recommend, if you are looking for a low hassle experience for you and your patients, these are pharmacies in our network in the area. They deliver very high levels of service, and the patients really like it because they, in many cases, are getting extremely high touch experience, a high level of customer service, in some cases, including home or office delivery. Physicians really like it because they minimize their callbacks because we guarantee supply. We also guarantee that patients will pay no more than $50 in the case of their copays on the ADHD brands. And so we cap the copay. We ensure that these patients are getting it at a guaranteed low price. And even during times of the year when they might have to work through their deductible, we'll even cover that and essentially serve as the underwriter. And this affords us a great level of loyalty from our physician customers, from our patients, from their parents, because they get the product that they were intended to get. They don't get a generic. They don't get something that's different than they expected. They get it at a price that they expect, as opposed to having sticker shock when their pharmacy benefits plan has changed or the calendar has switched over to the new year and their deductible reset. We cut through all of that noise and essentially give these patients a guarantee, and it really affords the pharmacy the benefit of being able to capture these prescriptions, enables them to very efficiently process our prescriptions, and these pharmacies continue to work with us on an ongoing basis. We're constantly evaluating the right number. Should we go a little bit more? Should we add a pharmacy in one geography versus another? And it's really an evolving program, one that's constantly learning, one that, as I said, is constantly evolving, and one that we believe can drive a lot of growth for us as we move forward. And really, the proof is right here as you think about how this benefits all the stakeholders. This platform and this program really does deliver value for the key stakeholders: patients, prescribers, and Aytu. It reduces patients' out-of-pocket costs versus what it would cost if they went to, say, a neighborhood chain retailer. It improves our margin as we think about just what we ultimately get reimbursed on a per prescription basis. It benefits the patients as well because they're actually coming back getting greater refills, and of course that benefits us as well. It improves the annuity value of these prescriptions as we move forward. And so a lot of positives ultimately netting in an improved patient experience, an improved experience for the physician and his or her staff. Pharmacies obviously are on board with us, and of course it's bringing business into their community pharmacies. I should also say we've aligned with 2 regional grocery store chains that have good reputations in their areas, and they really also provide very high levels of experience that patients enjoy. And we're always looking to evaluate, does it make sense to bring in an additional partner, whether it's in the form of a large independent family-owned pharmacy or one that potentially is a dominant regional chain, as is in the case of a couple of our customers. And so again, as we look at historical revenues and where we are as we move forward, we're sitting at 107 plus million in annualized revenues. We look back on our year ending June 30th. The key here, though, really is we are looking at margin improvement, and we have obviously looking specifically at where we are for the full year of the RX segment specifically, significant improvement in EBITDA. We're looking trending sort of north of 2 million and expect to see that growth. Expect to continue to see expenses come down. As you've seen, if you look at the last couple of quarters, expenses are down materially. R&D is down to almost nothing. And these margins should improve further as we think about getting out of our manufacturing facility and ultimately as we move to the CMO. And of course, again, as we shrink the sales and marketing budget on the consumer side, that will essentially go to zero. And it will really be squarely all eyes focused on the RX segment. And so to wrap it up before we bring Anna back here is our shares outstanding are 5.5 million, fully diluted, in course, inclusive of warrants and all equity instruments is just over 12 million outstanding, almost $20 million in cash as of the end of September 30th. And again, just excited about how we move forward. Positive EBITDA as we look at fiscal 23 as a whole for the current quarter. Positive dynamics really lending themselves for additional growth, shutting down the money losing or cash burning operations in R&D as well as in consumer, and the ability to leverage this very innovative platform that is RX Connect, that we think can continue to propel our growth, and we believe even has the opportunity for us to expand our portfolio, bring in additional assets, and excited about being able to continue to expand the portfolio in that way. So with that, I'm right around 25 minutes. We've got a few minutes here for questions from Anna and potentially if we have time from the audience. So let me bring Anna back in and we can have a brief discussion and then go from there. So Anna, let's bring you back on.
Hi, Josh. Great job. Yes. Let's jump in. Last quarter, you spoke about the pediatrics business and you reported some significant softness in those revenue numbers. So understanding, as you said, a lot of the revenue softness is due to timing issues relating to customer ordering, misalignment with prescriptions. So how should we think about growth in the pediatric business going forward?
Yeah, thanks for that question, Anna. And indeed, the timing of customer orders really did impact the pediatric business. But what's great is we're seeing improvement already. It was a timing issue. There was a payer change. One of our large customers had supply on hand, and frankly, they just have had to continue to work through the supply they had before they could reorder to sort of accommodate the new normal of kind of who's covering what. But as it relates specifically, to this quarter, and as we look at, say, for example, November factory sales units, they're actually already up over October when sort of some of this started to sort of get unwound. So we're seeing inventory move, we're seeing prescriptions go, and there was sort of a slack in the system. Our industry works really where essentially you've got to sell into an intermediary, the intermediary sells into a pharmacy, the pharmacy has to dispense the prescription. So that creates sort of supply chain lag. We're now beginning to see the benefits of that. Specifically, November unit sales are up about 38% over October, which is great to see. And so we're very confident the revenues are going to come back. We're seeing prescriptions come in. And, I'll point out that even, look, industry norms are you see payer changes periodically. We saw sort of one door close, so to speak, and not entirely closed, just some select plans selectively not covering multivitamins, for example. Well, just almost within the same breath, we saw another door open and that a large payer actually picked up coverage for the multivitamins. So, and that happens routinely. This is what we face in pharma. It's not unexpected, and we are really moving forward and kind of getting the inventory issue sort of resolved through the unslacking, seeing payer improvements, at least with this particularly large payer on the West Coast, and excited about the revenue trends that we can project going forward. So yeah, thanks for that question.
Fantastic. You also made a significant pivot in the business to focus on Aytu's prescription segment. So with that pivot, how should investors think about top line growth versus bottom line growth? And as you think about bottom line improvements, can you describe the biggest drivers of improving adjusted EBITDA and eventual cash flow?
Yeah, thank you. As I've mentioned a couple of times through the presentation, and we just want to continue to emphasize, bottom line growth has to be our focus. Growing an unprofitable, non-cash flowing, for example, consumer business, that just doesn't make sense. We're trying to drive profit. And while we did acquire that business multiple years ago, various headwinds really prevented it from getting, at least in the near term, profitable. So we've got to focus on bottom line growth. And we do expect the prescription segment to grow. But again, company-wide revenues will decline because $33 million in revenue was attributable to consumer, but that was not profitable. That was about a $4 to $5 million cash drag every year. And so by winding that business down, we should improve that margin materially. So, again, Do we expect growth? Of course we do. Over the long term, we absolutely do. Again, we expect the pediatric business to sort of come back to some reasonable level, support itself, ADHD, and ultimately sort of netting everything out, getting out of all the noise. We have to be thinking about sort of bottom line improvement. Revenues, I would think from a company perspective will be neutral to down from where they were, realistically down. But again, $33 million, that's a lot of revenue to make up in the prescription segment. We'll make up some of it, and I think we'll make up a meaningful portion of it. But for us, our calling card going forward is adjusted EBITDA as we progress and move towards profitability and ultimately cash flow.
And as it relates to your RX Connect platform, is this amenable to adding additional products beyond the current portfolio? And if so, how do you think about adding additional assets?
It absolutely is, and as I alluded to a little bit in my prepared remarks, we've actually already have a product that we've brought in. It's in the ADHD category. We expect to be launching it in the first half of calendar 24. It's a product that's been on the market for a while, although it has not been available as a brand for quite some time. So we'll be bringing that back, and we'll be bringing in assets that align with our therapeutic areas of focus. We'll be thinking about pediatric products that psychiatrists prescribe, given the fact that we're active in those offices, and ultimately fit within how RX Connect works. So there's ample opportunities to expand the portfolio as we move forward.
And Ann Robertson wants to know if there was a specific tipping point that pushed you to positive EBITDA.
It really was the suspension of the money-losing operations around consumer and R&D, and ultimately the markets speak loud and clear, and it's been very clear to us that if we can demonstrate positive EBITDA, just simply focusing on the core business, the RX business, focusing on what can drive cash flow, that will take us to company-wide profitability as we move forward. So it really was very clearly demonstrated that the RX segment can be profitable and has been 6 out of the last 7 quarters, and we expect it to be going forward.
Marcos is new to the company, so he wants you to clarify, how exactly are you selling, and are you white labeling? And if so, what percentage is the white label?
These are all our own products. They're all proprietary patented products that we own. These ADHD brands were developed in-house by Neos Therapeutics, who we acquired coming up on 3 years ago. We in-licensed polyviflor, triviflor, and carbinol, but we fully own exclusive U.S. licenses. So we don't distribute these products and just white label them. These are the only products of their kind. These are novel proprietary brands. So yeah, that's how we think about it. And not to suggest we wouldn't bring in other products that we would consider not necessarily being our brands, but our focus is bringing in and developing and/or licensing and having our own brands.
And Ed Hall says the numbers are impressive and the ADHD market is huge. So how do you continue to grow and gain market share? Specifically, what is the learning curve that has to be adopted by the doctors who recommend your product?
A doctor takes between 6 and 9 months to sort of alter habits. That's just sort of a known industry standard. So as we have physicians come on board, it just takes time for them to remember the mechanism through which they prescribe an RX Connect, the specific pharmacies with whom we work. Obviously, they need to understand how to dose our products. So that takes some time. Physicians are very busy by nature. So it just takes time. And it's really just repetition of being in there, consistently reminding them of, again, how to prescribe, where to prescribe, what to expect. And once they do experience the RX Connect benefits, they really tend to continue to prescribing. So it's just a matter of us. We're only limited by our size, which is small, but as we add additional geographies, as we creep out in additional areas, we expect to gain more and more uptake for our ADHD brands, as well as our pediatric products.
And Tom Delgado asks, what percentage of your products are over the counter versus prescription?
These are all prescription as we move forward. We obviously were in the over-the-counter business through our consumer health unit, but with us really shutting that down, and would expect that to be fully shut down by the end of, call it the March quarter, certainly by the June quarter. And so we'll be 100% focused on prescription products, most notably Adzenys and Cotempla, the ADHD brands, and the pediatric multivitamins, polyviflor, triviflor, and our antihistamine Carbinol ER.
And last question for you, Josh, from Milo. Are there any product acquisitions on the horizon?
Yeah, we're always looking and always active in discussions and things that we can bring in. And so we won't be looking for anything that takes material cash off the balance sheet. We'll be looking for things that we can do on a low cost, no upfront or low upfront basis, and things that we can secure via royalty deals and sort of things that are low risk to us. but always looking. We do have a product in the offing here in the first half of the year. As I mentioned, it's an ADHD brand. So that'll be the first sort of non-Aytu brand that we sort of bring in. By the way, we did license the brand, so it actually will become ours. So always looking. And BD is one of the things we feel like we do very well. Business development is a calling card for the company, and we'll continue to pursue that as an avenue for growth, along with our avenue to organic growth, which, of course, hopefully I've shared a little bit about.
Yes, you did, Josh. Great presentation. You went through that like a tornado. It was really great information. Thank you so much. We'd love to have you back in the future, 2024. Give us some updates. We appreciate your time and joining us today.
Great. Thanks, Anna. Thanks, everyone, for joining us. Have a good day.
All right, you too. Okay, stay with us. We'll be right back with Renforth.